Welcome in, folks. Welcome in. Welcome in. Thank you all for joining us. And we're going to have a great show for you today. We've been out for a couple weeks, but we are back and making things happen. So stay tuned. Welcome in, folks. This is the Real Life Real Estate Investing Show where we talk about real life real estate situations, but we bring you real life real estate solutions. And our guest today is none other than Mr. Jorge Abreu. Mr. Jorge has been investing in real estate for over 15 years now, right? He started in single family, small multifamily properties, and eventually worked his way up to large 100 plus unit multifamily properties. Before entering into the large multifamily acquisitions, Jorge had wholesaled over 200 plus single family properties. He fixed and flipped over 150 plus single family properties and developed and completed several new development projects, over $20 million in ground up construction. He also started and built a construction company, bringing in over $30 million in yearly revenue. I'm sure this is someone you want to have a conversation with. And that $30 million in revenue is growing. He is now an active and passive full-time multifamily real estate investor. And Jorge and his company Elevate currently have 8,038 doors and $550 million under management. The assets are located throughout Texas, South Carolina, Oklahoma, South Dakota, and Florida. Jorge is the CEO of Elevate Commercial Investment Group and JNT Construction. JNT Construction focuses on helping multifamily investors with their due diligence and full renovations. Strong points are locating deals, due diligence, executing CapEx, new development, and raising equity. He is focused on continuing to grow his network and locate more co-GP partners, passive investors, and also clients for his construction company, and always looking forward to adding value and helping others reach their goals. So without further ado, Mr. Jorge Abreu.
How you doing?
Mr. Jorge, yeah, we had to really get that bio down. I said, listen, this guy, I don't know if we should just be interviewing him. We need to get an autograph. How you doing today, sir?
Good. I'm doing good.
Very good. Very good. Thank you for joining us today. I know you got quite a bit going on, so it's very, very, we greatly appreciate you joining us here today to just share with us a little bit about what you have, what you're doing, and some of the things that you've accomplished over the times that you've been involved in real estate. So tell the folks. I mean, now of course we read your bio, but in your words, tell us a little bit about. Well, tell us who you are and a little bit about what you're currently working on. I know these are things that you have in the works. So what's a day like for you, during the week?
Sure. So, obviously, real estate investor. We're owner operators of large multifamily apartments. So, usually 100 plus units, anywhere from Class C properties to Class A. Been a little more focused on the Class A and new development in the last couple years, but not that we won't look at an older property that's got a good story to it, good value add component to it. So a day in my life is got three different companies. So we've got the investment company, Elevate, and then we rolled out our in-house management last year, so Elevate Real Estate Management. And then we've had the construction company for years, which is J&T Construction. I'm the CEO of Elevate and of J&T. And then on the management, I did bring in some partners, and I've got a CEO and COO. So I'm not too involved on the day-to-day there. We still have weekly team meetings and meetings when needed, but mainly my time is split between the investment company and the construction company, and just making sure the teams are performing.
Good stuff. Good stuff. So, how did you get started? I mean, just to give the folks a little bit of a baseline of how you got started and what helped you get to where you are today. Why real estate, and why did you how did you get started in real estate?
Yeah, no, absolutely. So, I was studying to be an electrical engineer back in South Florida. So I'm originally from Miami, um,
Hmm,
Cuban
okay.
descent. So both my parents are from Cuba, and I was born in Miami. Um, I a lot of my family members are business owners. My father had his own business, so kind of saw that growing up. And as I was studying to be an engineer, I knew I didn't want to be an engineer. Myself there, always good with numbers, so I decided to go and be an engineer. But at the same time, I was kind of searching for a business to start. And as I kind of did my research and read up on some successful individuals, I kept kind of going back to real estate, whether they built their wealth through real estate or they grew their wealth using real estate. So I got pretty curious on how to become a real estate investor, and um, got some coaching, read some books, and eventually started doing some deals on the side while I was at that point I had graduated and I was working at UPS in the engineering department, and finally started doing enough consistent deals where I quit my W-2. That was about 17 years ago, and started doing real estate full time. Um, that was in the single family space is where I started, and then kind of just grew from there. So started doing some small multifamily. I grew a real estate portfolio of single family and small multis. Ended up selling all that. Went Started really focusing on fix and flips, and then some new construction. Ended up doing some small multifamily new construction, and then finally, about 7 years ago, I was introduced to syndications. So
Hmm,
taking
okay.
down large multifamily apartments by syndicating them, bringing investors together, and taking it down that way. Um, and I knew that's what I wanted to do. I began selling any single family I had left, and just putting all my focus towards doing that.
Hmm.
And that's how I got to where I'm at now.
Great stuff. Great stuff. So now I see here it talked about you wholesaling 200 plus single family homes. Um, what was your so a lot of times what we talk about, with real estate investing, the beginning point of investing in many cases is wholesaling. Is that where you now? I know you talked about getting involved while you were at UPS. Is that where you started, or did you start in the fix and flip area? So, I mean, what was your starting point?
No, you kind of nailed it. I mean, the first deals were wholesaling, and then around the same time ended up doing some fix and flips. So we had a good mixture going for years there, where pretty much we would wholesale the deals we didn't want, and
Mm,
fix and flip the ones we did want. Um, Volume definitely went up on the wholesaling after '08 and
mm,
all those foreclosures.
yeah,
We were tying up quite a bit of those and then wholesaling them. Um, but yeah, I mean, it's a quick and easy way to get started in real estate, and definitely learned a lot from it.
would you say foundationally was wholesaling? Did it play a huge part in you getting to the point of being able to do the fix and flips?
I would say financially it helped, right, to
Okay.
get to where I wanted to get. Definitely learned a lot more with the fix and flips and the portfolio, the rentals. Um, to me, that's when you really start becoming an investor versus
Mm,
wholesaling.
right, right.
You really start.
Yeah. Somebody was saying we didn't have audio. I don't know what happened with that. So and no, and I made that point because oftentimes people want to get started in real estate investing, and sometimes people want to jump right into the whole fix and flip area because a lot of people are doing it and it makes it look like it's, I don't know, fun or easy. I don't know what the idea is for people wanting to get into that right away. Um, but I've seen that many times people will skip over wholesaling because of the tediousness of it, and the work that's involved. And they want to go from doing that with little risk to fixing and flipping with a whole lot of risk. What would be your thoughts on that type of transition?
I will say that, yeah, it's a lot of work to go direct to the sellers, right, and master that marketing. And, but that is how you're going to find the deals, right? Even if
Right.
you're fixing and flipping, same thing. If you're not going to another wholesaler, and you're actually going straight to the sellers. So I think if you can create a good system and process for that, I would focus more of my time doing that. And then I will say the fix and flips isn't as easy as it's made to seem on social media or even some of the um, TV programs, right? Like there's like you said, there's a lot of risk. There's a lot of work involved in that too. You need to know how to take into account holding costs, which a lot of the times you don't see that,
Right.
and it can eat you up real quick. Um, you need to take into account the fact that you need to be able to deal with contractors and hold them accountable. Um, you need to know how to account for unforeseens and things that can come up during these rehabs.
Mm.
Um, so yeah, I mean, I enjoyed it, but I also created a system around it and surrounded myself with a good team. And there were still some deals that I lost some money on the
Mm.
fix and flips.
Wow. Wow. And I think oftentimes that's that big piece that people miss, right? When looking at the fixing and flipping, most of the times, and I'll be honest, that's where real life real estate investing was born. Teaching people that there are real life things that happen in the business of real estate investing. Whether it's potential, like you said, managing contractors and contractors walking away and them not showing up on the job when they're supposed to. So there are so many different moving parts in doing the business of real estate investing in terms of fixing and flipping. It's kind of you talk about the unforeseens. I don't know if there's any business or skill that can teach you how to be, I don't know the word, clairvoyant, I guess. You have to foresee or plan for some of the unknowns in doing.
Contingencies, right?
Yeah,
Contingencies.
absolutely, absolutely.
Yep.
Um, so and in that, um, if you can share with the folks, what is the biggest lesson, or what is one of the biggest lessons that you learned in transitioning into the fix and flip? I know one thing you mentioned, and I want to make sure I highlight that, is that you got a good team and you had systems. What taught you? What lessons did you have to learn to get to the point of being able to get the team and the systems in place?
Unfortunately, it was the hard knocks, right?
Yeah.
On on the contracting side, I got burned. I got burned times. Just paying for work that wasn't quite completed yet, or not
Mm.
having a detailed enough scope of work, um, things like that. So as that happened, it was a hard lesson, but I learned, right, and I adjusted every time, so that it wouldn't happen again, at least not in the same fashion. Um, and then the holding costs, kind of the same thing, and the unforeseens, just taking that into account when you're analyzing a deal. Um, Another thing I would take into account is your time, right? Like
Right,
these things
right.
take a lot of your own time. So, if you're doing a fix and flip and it's going to take you from day one till you exit and you get your money, it's going to take you 6 months,
Mhm,
and
mhm.
you're going to make 10K. Is that really worth it?
Right.
That's the kind of stuff you gotta look at.
Mhm. Yeah, those are things, and I one of the things I now share with my students, and even speaking to people on a regular basis. In my opinion, what I've learned about fixing and flipping is you don't really make a whole lot of money.
No, and then take the taxes into account. We haven't even gotten there. Like,
Right. That's a major, major part of it. And those are the things when you talk about holding costs, when you talk about taxes, when you talk about the time aspect of it, a lot of people don't really get that. Yeah, there's a nice influx if you do it consistently, if you have volume and you having that happen. But if you're working on one or two projects and it takes you 6 months, in some cases, some people a year,
yep.
and you at the end of the time, you have a $20,000 margin, and that's gross, not to mention all your other costs that are going to come out of that. Um,
I
Again,
think
like
that's you nailed it right there. A lot of what's put out there are gross numbers, right? And
absolutely,
yeah,
absolutely, yeah,
you got to look
yeah,
at the net.
right. At the end of the day, when you get everything is said and done, you paid off your expenses, your taxes, and all that, you may make 5, 10, $15,000, depending on how big of a margin your gross margin you started with from the beginning.
Yeah.
Um, but also as you mentioned, as the time for the time, I look at it this way: if you're doing $10,000 or $20,000 for a 6 month window, um, the question becomes like you're doing all this work, and so if you would do two deals for the year, and we'll just get for the sake of you know a laughter, I guess, you net $40,000 for the year on working two projects, two projects, then that's pretty much minimum wage.
Yep.
you
Um,
know,
one thing looking back, every deal that I wholesaled and fixed and flipped throughout the years, if I would have just held on to it,
yeah,
you know, but
yeah,
there's difficult, right? The lending at a certain point gets pretty difficult if you're going to have that many. And I mean, that's why I like multifamily, right?
right,
You can
right.
get that scale without that many transactions and properties.
Absolutely, absolutely. And I want to definitely talk about the multifamily. You're transitioning into that. But one of the things that I currently do now is instead of flipping, I still do create a sale, but I sell on seller financing. So I create a note and hold that note. So I'm still getting the residual from the property.
Yeah.
Uh,
The only single family I still have are notes.
yeah,
It's a few notes that I have.
exactly, exactly. So thanks for the confirmation.
Yep. Yep.
So tell me, a multifamily. Now, what was the transition from single family to multifamily?
It was so at first I tried to do both, right? And
Hmm.
I realized that I couldn't do either one really well.
Mm,
Um,
okay.
and I tried putting in the team and putting everything in place for the single family without it needing me as much.
Hmm. Okay.
And that just wasn't successful. I think there are some investors out there doing it that have been able to implement some good systems, and they don't have to touch the business as much. But what eventually decided to do was just forget about the single family and put all my focus towards the multifamily. And when I did that, that's when I really started seeing the growth.
Okay. Okay. Now, one thing I think we might have skipped that I want to make sure we touch on is the team and the systems. Can you highlight a little bit of that to help the folks understand? Well, first of all, how did you get your single family fixing and flipping under management when you start using your systems and the teams, and how did that help you transition? Having those things in place to from single family to multifamily. Can you tell us about that?
For sure. So on the single family, I had two partners, and at first we spread out the responsibilities, and then as we grew, we began to bring on new team members, and mainly on the acquisition side to help us find more deals. And then um, we decided to bring construction in house. So I started a construction company, and that really helped with the rehabs and making sure they got done on time and budget. So, I built out that team, which kind of played side by side with the investing. Um, and we were able to scale pretty good with that team and that process. Um, just at a certain point, I kind of hit a brick wall where it was just impossible for me to continue to grow and scale more.
Mhm.
And that's kind of what led right around that same time where I felt like I just kept hitting my head on that brick wall is when I was introduced to multifamily syndication. So like I mentioned, I tried doing both and decided to just drop the single family and go all in on the multi. I brought over the same concept with the construction company.
Mhm.
So that helped. And then started growing the team kind of organically as it grew. It's a big difference between single family and multifamily is you really need a team. Like there's a lot going on, especially when you're taking
Yes.
down these larger deals. Um, so kind of just every time I saw a bottleneck happening in the different functions, I would bring somebody on board. So first thing was acquisitions, then it was underwriting, then we got pretty good at finding deals, so we needed to raise more equity. So then we brought somebody in that was our investor relations.
Mm.
Then brought somebody in for marketing. Now we brought somebody else for investor relations, and um, kind of continue to grow from there. Then brought in the management in house just for more control, more transparency. Pretty much the same reason I brought the construction in house.
Good stuff. Good stuff. So, and just to touch on that a bit, the GNT construction. Now, was that something you formed as a result of wanting to have more control over your rehab projects?
Absolutely.
Okay. Okay.
Yep.
Good stuff.
Yep.
Good stuff. So now I mean, I imagine it was a smaller company. Then you grew it into doing the development. Is that how that worked out?
Correct. I mean, at first we were just doing our projects, and then we began taking on third party work as well. So, no, that was another lesson learned, right? So, I talk a lot about focus, and because at one point I was not very focused and spread way too thin. With the construction
The
company,
the story of our lives as entrepreneurs.
yeah, those squirrels, right?
Right.
Um, on the construction company, it just started growing on its own and ended up bringing in a roofing sales department. I had at one point like 20 sales in the team, 20 sales associates, and
Mm.
we were doing new construction, we were doing renovations, we were doing commercial, all this stuff. So the light bulb really went off. Um, I read the book Traction, and that really helped me understand, focus and how to build out the team properly. So I just started cutting things down, right? Just getting really focused on my niche and what I was going to be doing.
Following the EOS and getting the right people in the right seats.
Yep. Yep.
Good stuff. Good stuff. Um, okay, so getting into the multifamily, uh, like you said, and then you got into syndication. You were introduced to the syndication. What? Well, for some of the folks that may not be clear on what that is, can you tell them what syndication is as it relates to multifamily, and how was the transition in you releasing a single family and getting into solely focusing on multifamily?
For sure. So, you can essentially syndicate any investment, right? Any business. When it comes specifically to multifamily, what you're doing is you're creating an entity. Within that entity, you've got the general partners, which are the ones that are going to run the day to day, And then you've got the limited partners, which are going to be the investors that are placing their money massively, and they're going to count on the GPs to run that deal and give them a certain return on their money.
Mm-hmm.
I had never raised equity before, at least not in this fashion. You know, on the single family side, we had a couple private lenders, you know, two or three that lent us most of the money we used, and then at a certain point, you know, it was a lot of our own money that we began using.
Mm-hmm.
So I never really had to raise equity. So that was new to me. And then when you go to sign on a loan for multifamily, you get some really good terms on the loans.
Mm-hmm.
The lenders really like the multifamily as an asset class. The only thing is that they require a certain net worth, they require a certain liquidity, and they also require experience. So
Mm-hmm.
if you've got no experience in large multifamily, if you try to go get a loan, they're going to tell you no.
Right.
Um, so I had to bring in a partner, right? Through networking and relationships, I had to bring somebody that had that experience on the first deal. Um, Found somebody that had that experience and could also help with raising the equity since I hadn't raised the equity. So we went out and we did the uh, sort of like the sweat equity, right? We found the deal. We were boots on the ground. We managed it, um, and then our partner signed on the loan and brought the equity for that first deal. Meanwhile, you know, I was taking steps to be able to raise equity, right? Kind of building my thought leadership platform, my social media, going to networking events, kind of just building that out. Um, and then on our second deal, we went in with the same plan as the first one, but our partner was not able to bring in the equity. They were spread too thin, and they told
Mm-hmm.
us about midway through. So we were kind of we were forced to try and raise some equity, and luckily we were able to do it. You know, I had taken those steps, like I mentioned, and we were able to do it. But I mean, that was a big mindset change coming from the single family, and something that really needed to adapt to. Um, the other big change coming from single family to multifamily was just the way to analyze deals in general, right? So when you're looking at single family, it's all about your comparables and what's, you know, 1 mile radius, however far you need to go to find similar properties, and that's what you're going to ask for your property.
Mm-hmm. Mm-hmm.
When you're doing multifamily, you're essentially buying a business. It's all about the net operating income and
Right.
what that property is producing, and that's how you determine the value of the property.
Mm-hmm.
So really understanding those financials, understanding, being able to create projections on what you think you can do when you take over the property. Um, that took a little while to get used to. You know, luckily, the engineering brain of mine was enjoyed that and
Right.
enjoys the numbers. Um, but I do know some that struggle with that aspect of it.
Mm. So now just to give a little bit of insight for the differences in comparing single family to multifamily. Now, of course, net operating income is the income that comes from the property. What figures or factors are involved, would you say involved in determining what that value for a specific property is? So you said, 12 unit that's getting X amount of dollars on a monthly basis. Like how is that value determined?
Yeah, so you've also got the cap rate plays a big role in this, and that's
Mhm.
determined by the market you're in, the asset class, so how
Mhm.
nice the property is, and then the real estate cycle. You know, the cap rate
Mm.
expands, um, and compresses depending on the cycle that you're in. So you take your net operating income and you divide it by your cap rate, and that should give you the value of your property.
Absolutely.
Um, but
Absolutely.
it's ever changing because both of those change, right, with
Right.
time.
Hmm.
Um, but the good thing about it is if let's say your cap rate stays the same, right? You're in a good market and it's stable. you're able to add income, then you may be able to add something like $100 in rent per month, and it
Hmm.
may not seem like a lot, but depending on how many units you have and what the cap rate is, I mean, that could equal millions in value.
Absolutely.
And once I realized that, that's when I was like, okay, this is where I need to be. This is definitely where you can create some serious wealth.
Mm. Mm. Most definitely. I mean, 8,000 doors. I got bad to tell. So, yours now in your syndication, how do you get the folks to get involved? Now, and I wanted to get a little bit deep into that because I know some people would say, people that would probably pay attention and know these things that you're talking about. How do you get the people involved to become a part of the syndication? Is there any SEC involvement? Do they have to have a certain net worth? How does that all come together for you?
Yeah, so we do two different types of syndications. So one is a 506c,
Hmm.
which means that we are able to market the property, or sorry, not the property, the offering, the investment offering. We're able to market it to the masses,
Hmm.
except it's only for accredited investors.
Right.
What that means is you've got to have either over 1 million in net worth, or make over 200,000 if you're single, 300,000 if you're married, um, and that's it. Like that if you meet that criteria, you're an accredited investor.
Right. Hmm.
Um, and then there's a 506b. So 506b, you're not allowed to market it to the masses. You're only allowed to go to individuals that you have a connection with.
Right. Hmm.
And at that point, they don't have to be accredited. They can just be what they call sophisticated. All that really means is that you understand what you're doing.
Right.
Um, so those are the two different type of offerings that we do. The SEC part of it is not too difficult. You just got to meet their requirements, and do a simple filing at the end, depending on what states your investors are from.
Hmm.
Um, and then there's some paperwork, right? So like when the investor signs up, they go through what's a PPM, private placement memorandum,
Hmm. Hmm.
and then that tells the investor, all the risks that come with investing in real estate, and that's it. They decide how much they want to place. Now, as far as the benefits, this is where. So before I started doing this, I invested some of my own money passively, right? I
Hmm.
wanted to see what it was all about. So um, I found some deal sponsors that seemed to be credible and have a track record, and went ahead and placed some of my own funds in there. The first thing that I noticed was the tax benefits.
Hmm.
So the amount of depreciation that I received on those K1s, because you'll get a K1 from each investment,
Hmm.
um, it was insane. Like I went from paying a good chunk of taxes to not having to pay anything,
Right. Right.
um, because of the depreciation. So a lot of our investors are looking for that, for the tax benefits. Um, a lot of the investors that we get to come in with us are also not aware of these alternative investments. They're used to just placing it in the stock market or a 401k,
Right. Hmm.
and with the returns you get there historically, it's not going to really push the needle that much.
Exactly.
um, and then compared to historically on real estate, um, you can make much more. There's a risk with everything, but historically, it tells you that you can make a much better return, and then you throw in the tax benefits. It's really attractive.
Right. Right. It just makes sense, if you understand what that whole process looks like.
It's a lot of educating, right? Because just
Yeah,
we're not taught these type of alternative investments,
definitely.
in our school systems, or just a lot of people don't see this growing up. Um, so yeah, it's just kind of educating our investors on it.
Great stuff. Great stuff. Now, what is there? So, to get involved in something that you're working on, is there a minimum amount that is necessary to get involved, or how does that process work for you to get involved with you?
Yeah, yeah. There's definitely a minimum. Usually, we're somewhere in the $50,000 to $100,000 minimum. Um, we're allowed to accept less, but I think the smallest I've ever accepted is 25,000, and I knew they had more. Right? We don't like to take like your last dollar. Right?
Right.
That's you know. Those aren't the type of investors we're looking for. We're looking for somebody that this is a portion of their funds that they want to place.
Mm, okay. Okay. And now, is there a specific? Now, I know you mentioned Class A and Class B property and some Class C. Now you've done development for for some of these. Is that right?
That's correct.
Okay. Okay. And for something like that, what can you give me like just an idea or a simulation of what a start to end project looks like? The raising the capital or finding the property, or like which area do you attack when you're going after something like that?
Yeah. The first part of it is finding a deal worth investing into. So
Mhm.
there's a lot of looking for deals, building relationships with brokers, and another big difference between multifamily and single family is how you find the deals, and it's very relationship based.
Right.
Um,
Hmm.
on the single family, you can be really good at marketing and just outreaching and finding the homeowners, right? Um, with multifamily, it's not really like that. It's more of going out there, building these relationships. Um, so we spend a lot of time doing that, and then analyzing the deals and underwriting the deals, right? So once we
Hmm.
do get something in front of us, then we got to see if it's worth it. That's quite a process within itself. And then once we find something that does pencil and looks like a good deal, then we got to physically go check it, make sure our assumptions line up with what's there. If they do, then put it under contract. And once we put it under contract, then we go back out and we inspect the property more in more detail. We bring out contractors, we walk every single unit, we dive into the leases and the contracts, and we make sure that everything lines up with what we thought originally.
Okay.
Then, well, meanwhile, we're also raising the equity while we're doing that. We're lining up the lender, and then this takes 60 to 90 days, and I
Hmm.
would I would lean to more towards the 90 days to actually get a deal closed.
Hmm.
Um, so a lot of times I see, since we're talking about wholesaling, I see people trying to wholesale large
Hmm.
multifamily deals, and I'm not talking about an 8 unit. What we focus on is 100 plus units.
Oh, wow.
Um,
Wow.
yeah, yeah. Every deal we do is 100 plus units. It allows us to have on-site staff, and it makes the management of it a lot easier. Um, so those deals, when I see somebody trying to wholesale a deal like that, I don't even pay attention because it is so hard to. I mean, there's certain things that we want to see in a contract. There's a certain amount of time we want to close the deals. To actually flip a contract in that world is not easy. Um,
Well, first of all, one of the main things is, and I'm gonna say what I mean. It is what it is. Oftentimes, wholesalers don't pay enough attention to a lot of the specifics of the details of what it takes to even wholesale a property like that,
yeah,
right? Like when you're talking about, running the numbers and getting the cap rates and all of that. Like a lot of times, I've come across it where wholesalers just say, it's selling for this amount. My fee is this much. I'm like, well, how are you justifying your fee if you don't know what it's going to cost, or what the actual rent rolls are, like the income from the property? How do you even understand your fee, or where if your fee makes sense to charge that amount if you don't have all the details or to even understand the details that are involved in purchasing a property like that. Have you ever come across something like that?
All the time, man, all the time. And honestly, I don't know anybody that's actually purchased a large multifamily deal from a wholesaler. So I
Mm,
don't understand if they even make any money. I don't get it.
right.
They're trying.
Right, right. And you think, I mean, for the type of property it is, if all of the numbers and everything make sense. I mean, like I'm okay with wholesalers making money. But what I do have an issue with is them not most times many wholesalers don't understand. They haven't taken the time to understand the necessities that are involved in the underwriting a project like that.
Yeah,
Right.
no,
Even when
100%. I've
right.
got no problem paying somebody if the numbers make sense, right?
Yes. Yes.
I don't even care what the fee is. If
Right.
at the end of the day the number I'm paying makes sense, it's I, I've spent resources and time when I
Mhm.
get these. I don't anymore because the ones that I did actually spend the resources and time ended up being garbage. One, I don't think any of them actually had the deal under contract, so they were just kind of pushing. And then they were so disconnected from the actual seller. Like it was
Wow.
like 2 or 3 or 4 levels deep.
Mhm.
I know there was one that penciled and it looked great, and um, they were able to provide us the information we needed. We spent all this time underwriting it, and when we told them we wanted to make an offer, they told us the they didn't tell us the deal was under contract. They told us the deal sold. And that's when I was like, what do you mean sold? Like these deals take 60 to 90 days to close.
Right, right.
You just told us a week ago or a couple days ago that it was available. And that's kind of, I think that was the last straw. I just stopped paying attention to it and started going straight to the brokers or the sellers themselves.
Wow, wow. So you find that it's easier to work with the brokers that have access to these types of properties than the
100%, man.
individuals?
It's very the brokers control it a lot. They know, they're doing the cold calling to these owners. They're building the relationships to the owners.
Mhm, mhm.
So a lot of the business goes through the major brokers, and there's only 5 to 7 major brokers nationwide that
Mm,
focus on multifamily.
okay, okay. You said something earlier that I want to kind of make sure it's reemphasized when doing these types of multifamily projects. The one thing that even if someone that doesn't understand, and well, with someone that doesn't understand the purchasing of something like that, like you mentioned, you're buying a business, and there are so many different intricate details that are involved with buying that business, especially as it relates to multifamily real estate.
Yeah, yeah. You really got to understand what you're buying, right, and how it's really performing, and kind of see through. Not every seller is going to have great financials
Right.
and
Oh
present
yes.
that in easy fashion. So you've got to be able to kind of read through the lines and understand what's really happening at the property.
Hmm.
And then you've got to understand what can you change, and how can you add value to the property and make sure that those numbers are realistic. Because the thing with projections is that they're projections. So um,
Definitely.
there's numbers that you can easily tweak to make anything look like a good deal. So you need to make sure whatever assumptions you're making in those projections that it's realistic and attainable.
Real stuff. Definitely. Definitely. All right. So you mentioned earlier that you got some coaching. How did that help in all that you do?
Look, I mean, it. How do I say this? So I see a lot of people get coaching, and then I don't know. I'm sure there's a percentage out there, but very few actually take action and make it happen.
About
Um,
90%.
is it? Yeah. I mean, it feels like I started a coaching program last year, and
Mhm.
yeah, I'm starting to see it myself, right? Um, but as far as me, like if I'm going to invest money in coaching, and I did it with the single family, I did it with the multifamily.
Mhm.
I'm going to take what that individual is teaching me, and I'm going to take action, right? I'm going to implement it.
Hmm. Hmm.
I'm vetting them out. I'm making sure that they've been successful in that field and they've actually done several deals, and I'm going to learn from their mistakes.
Right.
So to me, I think almost any coaching is worth it if the coach really has the experience,
Mhm.
and if you're really going to take action and do what they're telling you to do.
Right.
Um, just do it.
And, and as simple as that sounds, you'd be. I mean, I'm sure you know. I mean, being a coach yourself, you know how difficult it is to get somebody to just implement that simple saying. Just do it.
Yeah.
Well, let me ask you from your coaching perspective. Would you say, now some of your students may watch this. What's the percentage of people that you have coached that you actually can see them taking action?
Yeah, I would say my percentage might be a little bit higher because I'm not really doing it to the masses.
Okay.
It's a smaller group. It's very hands-on approach. Um, so I'm seeing maybe about maybe 50% or so. I
Mhm.
I know it's not that high on the larger groups for sure.
Right, right.
I would say it's probably closer to what you said. you know, Maybe 10% take action and 90% don't. But even that 50%, it drives me crazy. But I get it.
That was one of the things that I struggled with early on in coaching is wondering why people would invest the type of money that they invest and then still not do anything with the information that's given to them.
Yeah,
Yeah. Have you cracked the code on that
I
yet?
haven't, man. I cannot figure it out. I guess they're not good implementers. I don't know. I don't know.
Right, right, right. And and the thing about it is I get that if I get, sometimes that, the old saying is when people pay, they pay attention, but I'm like, that's not really the case. And I know that most times when people don't invest in something, they can't appreciate it most times, so they don't always take action if they don't invest in it.
That
But I
makes sense.
struggle with that to understand, like, how is it that individuals would invest, in many cases, significant amounts of money and still not do anything with the information that's being given to them?
Yeah, I mean,
Um,
I was essentially doing coaching for free in a sense in the beginning. People would
mhm,
reach out to me, and I quickly noticed that, man, I'm spending my time here, and they're not doing anything with it either. Um,
mhm,
if they were doing something with it, and I saw the success, I would have maybe not mind, spending that time. And the reason I started the coaching and created a fee, right, for coaching them is because I figured that, okay, well, if they've got money on the line, or they've invested money, and I mean, I definitely saw more happening after that, but
right,
there's still
right.
some that will invest the money and not take the time to take action.
Right, right, right. So what is the coaching that you offer now? Is it in multifamily or do you do any type of single family coaching or anything like that?
Just multifamily, how
Okay.
to get started with multifamily, how to scale it. We go through live deals that I'm doing, and try to walk them through how to get it done and how to get it set up.
Okay. Okay. Good stuff. Good stuff. So it looks like we're coming up on our time. How do folks get in contact with you to get some of the coaching, get the coaching that you're offering? And is it specific to, like, I know you mentioned that it's a smaller group that you work with. There's smaller groups and then there's some bigger groups. Like, can you kind of explain what the difference in the two is and how, it'd be easy to work with you?
Yeah, yeah. So information on the investments, they can go to Elevate CIG, so stands for Commercial Investment Group, elevatecig.com. If they want to know more about the coaching, they can
Mhm.
go to my name, so jorgeabreu.com. And if they want to shoot me an email, so Jorge at elevatecig.com,
Mm,
I'll send over some free content. I've got a lot of stuff on how to get started in multifamily, how to raise equity, and different free content that I can send over. Um, yeah, that about covers it. I mean, I'm on social media, pretty much on all platforms as well.
okay, great stuff. Great stuff. All right. Anything you mentioned earlier, and I want to make sure I capture all of this, that there were some books that you read to help you along the way. Is there one or possibly two books that stand out to you that you would refer to the audience?
Yeah, I would say, if we're going to stick to more business or real estate, traction, which I already mentioned, but
Hmm. Hmm.
really like that one. And then Think and Grow Rich, I think, is another great one. Um,
Definitely.
yeah,
Okay, great stuff. Great stuff. I see there's a comment. I was actually trying to see what the person's name was. It says they have a big pipeline and they said they will be calling. Okay, great stuff. Great stuff.
sounds
All
good.
right. All right. So, Jorge, thank you so much for joining us today. And you've given a wealth of information, and I appreciate that you taking the time out of your day to to share with us. And we're definitely going to be following up just to kind of get an idea of how we can help people get started with what you're doing as it relates to multifamily. Anything you want to share with the folks before we leave today?
I mean, first of all, I appreciate it. I enjoyed it. I hope I was able to add value to your listeners. And, I'll leave you guys with just, I know I talked about it a lot, but there's a lot of different things you can do within real estate. I suggest you pick one, focus on it, master it. And then once you've got that mastered and you've got systems and procedures in place, then you can begin to maybe uh, diversify that and go into different parts of the real estate.
Okay, great stuff. Great stuff. I have one other question that someone just left. Your construction company, is there a specific town or city that you work in, and how can they get in contact with you for construction work?
Yeah. So we are in several states and growing.
Great, great.
I want to say we can, depending on how large the project is, anything in Texas, we can definitely cover, and around Texas, so Oklahoma, Arkansas. It
Hmm.
becomes a little further than that, then it's got to probably be over a million or so in renovations. And they can contact us through the website. So JNT Construct, and that's JN, the letter N T, construct.com.
Okay, very good, very good. All right. Again, thank you so much for joining us today. I appreciate the time. I appreciate the wealth of knowledge again that you shared with us today, and I'm super excited to see what more you have coming up. When you get to 10,000 doors, then maybe we'll bring you back and you give us an update.
Awesome, man. Awesome.
All right.
All
Thanks
right.
again.
Thank
All
you.
right, folks, this has been the Real Life Real Estate Investing Show, where we talk about real life real estate situations, but we bring you real life real estate solutions. I'm your host, Glenn Glass, but affectionately known as Mr. Dollar Out of a Dime. I look forward to seeing you all on tomorrow for the Real Life Real Estate Investing Uncensored Show. Talk to you soon.